Good evening, everyone. Welcome to closing comments here on September 29th. Let's jump right into our charts and see what happened in the markets today. First up, December live cattle. Pretty quiet day across the cattle market as prices bounced out right around Friday's range. We did see a nice inside day here on this December contract as price consolidated here between 233 and 235. Good accumulation day here, not a whole lot of excitement, but we are seeing a good buyer support continue to hold down here in the low 230s. We can see here today early test of that 233 level, which offered a bounce, rallying up towards Friday's high. Couldn't quite get that momentum to roll through that prior day's high, so we did see this market falter back down here towards 233. However, all day long we did see multiple tests of that 233 level, and the buyers continued to defend that line, showing good accumulation down here at these prior couple days lows and value areas over here. As we head into tomorrow's session, we want to make sure that the bulls continue to show good accumulation and try and get this ball rolling higher. Bulls need to get a push here above this prior day's high, Friday and today's high here at 235.10 to 12. Any bids above 235 there should get this market rolling back towards 236.5. And if we can see the bulls push up through there, we should see the 240s trade fairly quickly and see this market continue to get back on track and rolling back towards these prior week highs as well as these prior all-time highs. Big picture uptrend still remains intact. We continue to see good support here at all the right places. Key moving averages here, trend line, value areas, we're all hitting these spots and showing good buyer support here. So things are still looking good here for the bulls. We just want to make sure that they can continue to defend the 230 mark. Any offers below 233 as we head into the rest of the week, we could see a flush down here towards 230 to 231. We want to make sure the bulls continue to defend these levels and this rising 50-day moving average here. Any probes down in here, we should see a good buyer pushback from there. However, if we do get any offers below 230 and a close below here, we could see some downside come from here. So make sure you're protecting yourselves down here below 230. But in the meantime, we continue to see good balance action here between 230 and 235. Good buyer support. We should see this market start to rally back up here and continue to put pressure up here into the 240s. Let's jump over to the feeder market now. We got our November feeders as we do have this November contract as the new front month. We did see a nice gap open higher on in the feeder market today. Prices open up there right around the 356 mark. Early rally to 357. However, I just couldn't see that rally hold, and we did see this market push back into Friday's range. And a good show of support here at this 20-day moving average, which is where today's low came in, just undercutting that 353 level. Good support here though by the bulls today, down here near this 20-day moving average inside Friday's range. We want to continue to see the bulls show some of that aggression they showed this morning off that open with that gap higher. If we can see those bulls continue to get some bids there above 355, we should see this market continue to push back up here into the 360s and challenge these prior all-time highs. Good support at the major moving averages. These feeders still have some good support all the way down to this 50, so we could see some flushes down into there. However, at the moment, over the past few days, we are seeing some good pushback off of that 350 mark, so we want to make sure that the bulls can hold that level and don't need to dip into some of these prior levels. We should see this uptrend start to get back on track. Bulls are just kind of having to fight a battle here at the moment, but we are seeing good support in the right spots on both this live and feeder market. Look for this rally to continue back up towards these all-time highs as we're moving into the fall. We do just want to be cautious here with this 342 level and this 50-day moving average on this November feeder contract, as well as that 230 level on this December live contract. Those are going to be some key levels to defend for the bulls here going forward throughout the rest of the week and to keep this market rolling higher. Next up, we got our December corn futures. Pretty quiet day here as price just consolidated and balanced out here in between our moving averages. Good support down here near these range lows. As we discussed over the weekend, we did see this market starting to get stuck in a pretty range-bound action. Split this thing into thirds, and we are continuing to see good buyer support down here in the bottom third of this range. We should see the bulls try and continue to put pressure up here on 430. However, until they can get a break above that and close this gap back here from the 4th of July weekend, we should see this thing continue to consolidate and trade sideways. Not a whole lot of directional movement expected in the corn market here at the moment until we can clear beyond, get a clear and close beyond either one of these edges. Breakdowns below 415 should lead us back to contract lows, and bids above 430 and closing this gap could get a new uptrend back on track. But in the meantime, look for a pretty quiet, choppy action in this corn market. Crude oil futures had a pretty big red day here. We did see last week this market pushing all the way back across this range from the lows to the highs. Good pushback there on Friday, probing that prior month's high, or excuse me, the September high, and a little pushback there. We did see some offers coming below Friday's low here early today with that opening range, and price never really looked back, pushing all the way down here towards 63. Good pushback off of these range highs here by the bears. Exactly what's expected in this range bound market. Look for prices to continue to consolidate here in the low to mid 60s. This market should continue to push back down here towards 62. We do expect to see the bulls continue to defend this 61.5 to 62 area like we've seen and keep this market range bound. However, if we do get some breakdowns below 61.45 here, we could see a nice flush down into the 50s. So below there, we'll open the door to some downside. But in the meantime, look for this market to continue trading sideways in a pretty choppy environment. Last but not least, our equity indexes. Pretty boring day here in the equity markets. We did see some early upside, and most of that came in the overnight session. And then pretty much just a pretty quiet, balanced day here, trading around the 6,700 level. Continued to see good support there at 6,700 all day long. Saw some good bounces off of there a few times. But this market is kind of getting stagnant up here at the moment to start the day. Probably just early week jitters here as we are heading into this big jobs data that's going to be sprinkled in throughout the late part of the week. So probably not a whole lot of directional movement here, letting this market consolidate here until we get some of those important jobs announcements coming Wednesday, Thursday, and Friday. So as long as we're trading above 6,700, we should have a pretty slow drift higher here. But this market should be on the lookout for any potential volatility as we move into that jobs data later in the week. However, other than that, this big picture uptrend still remains intact, and we expect to see these equity markets continue to grind higher here as we do still have a very strong environment, and we should see these higher prices move into the end of the year. That's all we got for tonight. Hope everyone had a good Monday. We'll catch you guys tomorrow.